Hi, and welcome to another edition of TraderCast's Daily Market Report. We are looking at the multiple time frame analysis for US 500 or S&P 500. This quadrant here is our daily, 4-hourly, hourly, and 15 minutes. So I'll make those charts larger. So this is our daily. We could see that we saw a bit of a rejection here at 50 period moving average also, which is close to this low here and this low high. And this kind of 1972, 1978 level is also our last fib from all-time highs down to the recent sell-off as well. If we go to our 4-hourly time frame, it appears to be rising wedge with creation of higher highs and higher lows, but the price is clearly supported by this orange line here, which is our 200 period moving average at 1953, 1954, and we bounced off that already today. Hourly time frame appears to be the same. Buy zone between 20 and 50 period moving averages, higher highs, higher lows, a bit of a sell-off around 1955 down to 1950, and then subsequent a rally into close as well. And if we look at our 15 minute, we can see that price action is coiling. So what I'll do is I'll open up the charts, the advanced charts, and look into that into further detail. Actually, what I'll do is I'll make this a little bit smaller so that there's no confusion to what we are seeing. Is it'll be better for you. We can see that this spike here actually happened overnight or early morning session. We went through 1970, 1972, and then subsequently pulled back, and this was after the IFO numbers were printed and published on the economic calendar, which caused a DAX to pull back, which initially rallied almost 1% in the morning and then sell off. Same thing with FTSE, so US futures were dragged lower. Below this 1964 level, which is our low here, created a bit of a flagging formation here, and then a nice little sell-off into 200 period moving average, this 1955 level, which was tested on a number of occasions. And when the cash markets opened, we kind of rallied back to retest this 1964. So from 1950 down up to 1964, down to 1955, up to 1964, down to 1968, up to 1964, and we kind of pushed through that level again into a close as well. So the levels that I'm keeping an eye on for tomorrow's trade is if we break higher and move above 1964, then 1970, potentially 1972 come into play again as a logical upside resistances. Only a successful breakthrough above those two levels could potentially target 1978, but this is a coiling action with creation of higher lows and slightly lower highs, so it's a bit messy. We could see this messy action for the next couple of days. Fed is meeting tomorrow. They're starting with their meeting tomorrow, but obviously the big number is going to be published around 6 o'clock and 7 o'clock on Wednesday European time. So the initial support is around here at 1962. A loss of that level could potentially target 1955, 1956 very, very quickly, and only a loss of that level could drop down to retest 1958, even 1940 very, very quickly. So the numbers that I'm keeping an eye on are fairly straightforward: 1956, 55, 1964 trading range. Hopefully this was informative, and I'll look forward to talking to you soon.